right, ladies and gentlemen, it's 9 o'clock. The wait is over. Welcome everybody to this Audit and Finance Committee meeting on February 7th. We're going to call the meeting to order. The first item on our agenda is the acceptance of the minutes from our November 1st meeting. I'm trusting that everybody has received those, and I will entertain a motion to accept the minutes as is.
I'll make a motion to accept the minutes from the prior meeting.
I have a motion. Do I have a second?
I second that motion.
I have a second. All in favor, side by saying aye.
Aye. Aye.
All opposed, like sign. Hearing none, the minutes will be accepted unanimously. Second item on our agenda is we have our internal funds audit results. Jennifer Christensen with Carr, Riggs, and Ingram is with us today. So Jennifer, the floor is yours.
Thank you very much. Good morning, everybody. Thank you for giving me the time to present. And as Travis mentioned, the audit that we performed is on one particular fund, the internal funds. And so these are the funds where the money comes in and out of the school for things like fundraisers, field trips, admission events, football games, prom tickets. And so it's funds that are raised by the students and then spent on those students, on the clubs, the teams. And so we went and we performed the audit. And would you like me? I have a presentation. So do you want me to share my screen and bring it up? Is that the easiest way to do it? Yes. Okay, no problem. So we have right here, I'm going to advance a slide. There we go. So what I'm going to go over briefly would be the financial statements that we had and then the audit process. And then we have, we do a lot of testing out at the schools, and we end up having a lot of different recommendations for improvements, which we call school findings. And then we do the same thing on a district-wide level. So as far as the financial statements, just comparing year to year, you could see total assets, we were at about $11.7 million. And liabilities were $145,000, which is typical because a lot of times, especially near year end, June 30th, there's not as much activity going on since the schools aren't in session. And so there's not a lot of bills to be paid. Usually they're kind of cleared up by the end of the school year. So that's why we have our assets are a lot larger, and the assets are going to be, majority of it's going to be cash. And then we do have some inventory and some accounts receivable, but the bulk of the schools are going to have cash as their assets. As far as additions, which is going to be similar to revenue, we had about $10.7 million. And you could see compared to last year, we were at $6.3 million. And that's a direct effect of COVID and the activities that decreased. And so if we were to go back in 2020, our additions or our revenue was about 10.4 million. And if you remember, things kind of shut off right around March of that year. So we had about, 3/4 of a school year of activities in internal funds that year. And then if you go back to 2019, we were at about $13 million. And so you could see we're starting to kind of tick back up to the activity levels. A lot of the restrictions have been lifted. There's still some schools, I think, that are slow to get back to that same activity as far as like fundraisers. There might be elementary schools that just aren't quite there yet, that they're going to be doing the same fundraising activity as they did back in maybe 2019. But for the most part, a lot of that activity is back to par. And then you could see the deductions or expenses for the year were 9.7 million. So when it comes to internal funds, one thing that's a little different than other funds, or even when we think of our personal finances, that money that's raised is really supposed to be spent in the same year it's raised. Because if you think about a fundraiser, if there's a club that has a fundraiser, well, the purpose of the fundraiser is to spend it on something on those same students. So what we would expect to see is that our change in net position, or in other words, in a for-profit world, you would call it net income. You would expect that to be very close to zero. And so here we are seeing, and we're seeing this at all our school districts. In prior years, maybe it was a little closer to zero. But as we start seeing the activity cranking back up after COVID, the expenses are have been a little slower to go up. And I don't know if that's just schools being a little weary, or, just saying, okay, let's start getting our funds accumulating a little bit so that we can then spend it on these bigger ideas that they've had, since they haven't really spent as much in the last few years. But we are seeing that trend across all the school districts that we work with. But that's something we'll also want to monitor as the years go on. We want to make sure that if the money's being raised, that it's being spent that same day. Nothing of concern right now, but just something that we kind of keep an eye on for the future, to make sure that the district's communicating with the schools that if they're going to raise money, they should make sure that they have a plan to spend it in that same school year. As far as the financial statements, we had an unmodified report, so that's a clean audit opinion. The financial statements were materially stated in accordance with our accounting principles, and so everything looked good there. As far as audit adjustments that we had, the adjustments that we had this year were to adjust receivables and to adjust the allowance for doubtful accounts. And these are adjustments, at least the allowance for doubtful accounts. This is probably going to be an adjustment we'll have every year. And the reason why is the district sometimes, when they look at accounts and they write them off, or if they look at allowing for certain amounts, they may be a little more conservative, where they maybe hold on to those accounts, and after a few years, then they bring it to the school board's attention. They have to get approval before they can write off any receivables. But their process, it's going to be a few years. They're going to go ahead and attempt to collect it. Where when we come in as auditors and we talk to the school district about receivables, and these are going to be receivables for tuition for the tech centers, for the career centers. And but when we come in, we kind of discuss, well, what's the likelihood that tuition from a year ago is going to be collected? And so the district then gives us percentages to use to calculate an allowance based off of if an account is older than a year or 2 years. And so that's why we do that just as part of our audit process, is we adjust that allowance each year. In our footnotes, there aren't a lot of footnotes that accompany the internal funds financial statements, but we do have some investments. And so we do disclose some details about the investments. And if there were any concentrations, if we had more than 5% of investments in one particular type of investment, we would have to disclose it. But this year we didn't have any. Some years we do have them, but this year everything was spread out among different types of investments. As far as our audit process, there are certain things we're required to communicate to those charged with governance. And these are a couple of those things. And one would be if we had any disagreements about accounting principles, how to apply them, maybe estimates, if we felt that the estimates weren't reasonable, but we didn't have any type of disagreements like that with management. As far as difficulties encountered during the audit, we didn't have any significant difficulties. And some of the departments, especially the finance and accounting department, there was some turnover in key management positions this year, but we still got the information we needed. I mean, everything still rolled pretty smoothly. It probably took us a little longer to issue in the end than we normally do. But as far as when we asked for information, we got it. When we asked questions, we got answers. And so we were, really happy with how the process went this year. Consultation with other accountants. That's if there are any issues that we're aware that the district went to somebody else and asked for, consulting on how to apply a standard or what standards to apply. We would want to be informed about that. And we're not aware of any type of consultation like that occurring. And also, if we came across any kind of fraud or illegal acts that were material to the financial statements, we would be required to communicate that. And we did not come across anything that we would be required to communicate, no fraud or illegal acts. And then I always try to mention, because if you can or can imagine, we're looking at the internal funds for, close to 140 different schools and departments, and it's a lot of things we ask for, a lot of paperwork, a lot of we ask the schools for them to send us stuff. And so it's a big process, and everybody really does their part to make it work. And so I always want to just kind of put something in to really thank those different departments. Like I mentioned before, a lot of the information we get from the finance and accounting department. We work with Carol in the internal audit department on especially on the planning side to kind of share some of the risks that we've identified or some of the areas that we want to focus on. And so, and then the schools, both the principals and the financial secretaries, after we are done with our audits, we actually schedule an exit conference with every school with their principal and their financial secretary to go over what the results are. And at that time, it gives them the chance to maybe send us more information if there's something that they didn't send us the first time. And so so then we accept that information, we'll go ahead and perform our testing on it. And then that may result in removing some of the findings from their report, because we feel like it's important to give them that chance to, there might be more to the story, and we do all of our work out of the district office. And so that gives the schools a chance to kind of let us know, like I said, if there's more to the story or there's more to the transaction that we selected to test. So, so we do interact with the principals and the financial secretaries. So as far as our school findings, as I mentioned, we perform testing at every school and department that had any kind of activity in their internal funds during the year. So this year that was 146 different internal accounts, different schools and departments. And so we select a sample at every one of those locations, and we perform compliance testing. And I listed there some of the different areas you could see that we perform testing on. So for deposits, we're looking to see if a teacher collects money, did they turn it into the front office in time? Did the front office then deposit it timely? Did they record it to the proper account? And so there's lots of little tests that we perform on these samples. And anytime we come across one that isn't in compliance with the rules, and by rules, there's rules at the state of Florida. The Department of Education has a red book that has a specific chapter on internal funds. So we test in compliance with those rules and with school board rules and with the manual for the internal accounts manual. So we look at all these rules, and if we come across one instance where a school didn't comply with it, then that results in a finding, just so you can kind of have an idea. And we have to do that because we are just picking a sample of the whole population. So we feel like if there's one thing then that we come across, we do want to report it. But I kind of want to mention that so that you can kind of take it all in context. This next graph is going to show the average findings per school or department. And so you could see over the years, it's been relatively consistent. And then in 21, it dipped down a little bit. And we expected that because the activity went down so much in 21 that we would expect that the findings that we come across are also going to decrease because you didn't have some of those fundraisers and activities like that. And then in 2022, it did increase up to 0.88 findings per school. So a couple of factors I think should be accounted for here. One is the activity went back up. So we did expect that the number of findings per school was going to increase this year. And then also there are some times where you may have, luck of the draw. It's the sample we pick. And, schools tell us this all the time. Out of the, 200 deposits they had during the year, we picked the one that they didn't deposit it timely. And we always seem to pick that one. It's all random. I promise the sample is selected randomly. But sometimes there is something to that. It's the luck of the draw, or, we may just happen to pick, it may be a school that, they have done all their deposits timely, and maybe there was one that wasn't done timely. And so there is some to that when you're picking samples. And then you also have every year you're going to have a school where they have some circumstances. Maybe they had their financial secretary was out for an extended time, for an illness or something. And during that time, you have backup and you have different people who have to take over those roles. And there might be some things that that didn't happen, maybe a deposit that didn't happen timely, or an approval that wasn't received ahead of time. And so we tend to have that too. And I can think of, we did have one case where, it's real simple. You had a new employee that was had a new role, and they didn't realize there was this one rule. And so every time they weren't in compliance with that one rule. And so it ends up resulting in every sample we looked at, that same item wasn't followed. And so then you have a high number of findings for that one school, and it kind of skews things a little bit. And so the one we had this year, if I were to go back and remove that one school and those findings for what that one person's role was, then you're looking at getting back to closer to 0.8 findings, which you're going to see is a little more consistent with the prior years. So I wanted to, at least explain that. The next thing, I just like to break out the number of findings that we had at each school. And if you look there, we have 89% of our schools had either 0, 1, or 2 findings. And so that is, an incredible number. That's great. And I mentioned before, you'll see at the bottom of the list, 5 or more. We had four schools. And again, that's going to be pretty typical, that skew, but to have, 89% have 2 or fewer is great. It is a little lower than the year before. We had about 93%, but again, it's a little hard to compare year to year when we had such less transactions last year due to COVID. But you could see definitely the majority of the schools have a small number of findings. Next, I put just a couple of the 5 most common findings. And this is something that I know Carol looks at very closely when she's trying to look at maybe some of her risk assessment and what areas do we want to make sure that the finance and accounting departments emphasizing to the schools and making sure we have proper training for it. And so you could see here some of those findings. The deposit slip not dated. Unfortunately, we can't test if deposits are being made timely if they don't date the form. So that would be the reason for that. And there were 21 instances. There could be one school that had 4 instances. So that's total. Doesn't necessarily mean it was 21 different schools that had it, but it just appeared 21 different times. And then we have fundraiser report. They're required to get those. If somebody wants to have a fundraiser, they have to get approved by the principal ahead of time. And so we had instances where it wasn't approved, or it just wasn't approved before the activity happened. And then I mentioned the deposits not being made timely to the bank. And then we had some deficit account balances. A few of these we do have a few where there were some, when COVID happened, there were some, maybe some deposits that were made. If you think about, like, we had prom, where all of a sudden all the proms were canceled. And so I think the schools, the couple that had that, I think they're working that out and getting those balances back to positive. They're required to come up with a plan and submit that to the district. So they do that. And then the 5th one was missing the report of monies collected form. So that's a form that the teacher, when money gets collected, outside, or when the money gets collected, they fill out a form that has the details of what they're collecting and how much. And so there were some of those that weren't included in their records. This next one, it's just more visual. I know it's very tiny, but this is just showing a few more of the findings in addition, or including these 5 that I just went over. But it's just for you to kind of look at year to year, the changes. And you could see the orange is the year that we just audited. And then the light blue is the year before, and the dark blue is the year before that. So you can kind of see which findings are occurring more often in the different years. And some of them, especially if you look at like admission tickets, that process changed a lot during COVID. And so a lot of schools now you can use like electronic vendors to purchase tickets. And sometimes that then eliminates the need for, you don't have the forms, and you don't have the findings related to the forms not being signed. Actually, I guess those are the missing tickets, but on the forms above it, sometimes we have findings that decrease because of changes in processes. And also, let's see, we have, again, some of these things are kind of luck of the draw, but you could see, I mean, a lot of them are fairly consistent from year to year of findings that we have. There's always going to be those common ones that we have every year. And so, so if you have questions on these, certainly you can ask, but it's just to kind of show you the trend on some of these findings. Next are the district-wide recommendations we made. And so the first one we have, when we have recommendations, they kind of fall into three different categories. The top category is what we call an internal control deficiency. That would be a material weakness. And so, so that is a internal control deficiency where it can result in a material misstatement of the financial statements and not be detected, not be corrected. And so we did not have any of those. But then the next level down is what we call a significant deficiency. And we did have one of those this year. And basically, this is not material to the financial statements, but it is an internal control issue that we feel like is important enough to bring to your attention, which is why it's defined as a significant deficiency. And because it related to a finding we had the prior year, it's what we call a repeat finding. It changed a little bit, so I'm going to explain it. When we were testing at the technical colleges, testing the receivables from students who owe tuition, we noted during last year's audit, we picked 11 invoices to test, and 6 of them were for students who either dropped out and did not end up attending that class, and the invoices should have been voided. So they were not actually amounts that were owed to the school district, but they were never voided. And so we had given that finding last year. And so this year, when I did my testing, I went back and looked at those 6 because I wanted to see if they had been voided out of the system. And 3 of them had been voided out, but 3 of them had not been voided out. And so that's what resulted in having that repeat finding. And so I wanted to show, and this is, again, a lot of words, but I thought it was important when we have a finding, we're required to have management give us a response to include in our report. So I thought it was important to put the entire response in here that they gave us, because there were some different factors of why they said they didn't void out all 6 of those. And some of it was just, I think, some miscommunication. One person thought somebody else did it and somebody else thought, someone else did it. But a couple of things they mentioned is that they had some other things going on during the year, some accreditation reviews that they were had really focused on, and also losing a couple of key staff members. So duties had to kind of shift around. And so now they're saying they're going to be scheduling in-person monthly meetings to train the staff on all the procedures and what to do with invoices and outstanding invoices to make sure that they're being investigated. And if they need to be removed or voided, then they will. And then also they're looking at contracting with the new collections agent for those amounts that are owed to the district to make sure that they're following up and being able to collect on those. And so so that is the response they gave us to that finding. But again, I thought it was important enough to bring it up, and that's why we included it in our report. The third level of findings we have or recommendations would be what we call improvement points. They're not internal control deficiencies, but they're just things that we've come across that we want to share with the district, and we feel that they're important to consider. And one is, again, a repeat from prior year where we had suggested that they look at their manual, the internal funds manual, and update it. It had been several years since it had been updated, and there have been different rules that have come out that what we don't want is for a school board rule to contradict what's in the manual. And so we just recommended that they review the manual, make any updates for that. And that is something that the management responded to us and said that they have plans to look at that this year. That's on their list. Again, they did have some changes in the department. And so they had some limited resources this past year, but they understand and they agree that they're going to go through and look at that manual this year. And then the other comment was completing an IT risk assessment. The district normally performs an IT risk assessment every 3 years, and then when the pandemic hit, they had to stop. It was the first year, it was just they weren't able to get to. They have an offsite location, and they just weren't able to do it because they weren't in person. But now that we're kind of getting back into the groove of everything, we recommended that they go back to doing that every 3 years. And so the IT department did respond to us, and they told us that they have it in their plans to do one of these assessments during the 23-24 school year. So again, as I mentioned, there were no material weaknesses noted. I just want to flash up my contact information in case anybody has questions or wants to reach out to me. Here is my information, and then I'm going to stop sharing. I'm going to try. There we go. So if there are any questions, again, I want to thank everyone we worked with at the district. It's a big undertaking, and it wouldn't work if everybody didn't do their part. So we truly appreciate that.
Thank you, Jennifer. Is there any questions before we let Jennifer wrap up? No? Excellent. Thank you again, Jennifer. Appreciate you.
Okay, thank you. Have a good day.
All right, moving right along. Our next item is the finance update. So Heather, I believe, is on. I appreciate you being on today. Take it away.
Good morning. First of all, I'd like to introduce you all to Alain Nunez. He's our new Senior Director of Accounting. We also have a Director of Accounting named Lauren Hinton, but I wanted you to meet Alain today. He's doing a great job, so welcome. What we'll be going over today is the quarterly performance report. So I'm going to share my screen. Is everyone able to see the performance review? Yes, okay. The first couple pages are just a summary. They go over what's in the report. I want to start with the quarterly economic update. So this is as of December 31st, 2022. Our long-term portfolio remains a little bit below the benchmark at 0.79 years versus 1.82 years. And the yield is also slightly below the index at 4.46 as compared to 4.61. Total earned income for the quarter was $167,000. There's a high credit rating, and for the quarter, the portfolio return was 0.78, which is slightly underperforming the benchmark return of 0.82. Our short-term portfolios are is an average of 0.4 years, and the year yield is 4.09%. Total earned income for the quarter was $512,000, and the average credit rating is AAA also as well. So this question came up at our last audit committee meeting, so I want to explain our investments a little bit. What we've done is we have a diversified portfolio. We have short-term investments plus long-term investments. We've changed our investment policy to include commercial paper. So we've been doing that heavier over the last couple of years. Our long-term portfolios, to explain the reason that it's below the yield, if you think about it in the way that those range from around 1 to 5 years. So 5 years ago, if we took out in a long-term investment for 5 years, the rates were different than what they are now. So you have to wait until that matures until you can cash that investment out and reinvest. So as those investments mature, we are cashing them out and investing them in the current highest rate that we have. We want to keep a chunk in short term. And right now those rates are higher. Some are up to close to 5%, 5 basis around. and some are a little bit lower. But it's not, it's just an exercise of making sure that we have our funds in multiple places that are to ensure safety, security, liquidity, and growth for our funds. Do you all have any questions about that I could address right now? Okay, we'll move on to the next slide. To summarize this slide, many economists feel that a recession is coming. Inflation has moderated a little bit, but it's still fairly high. Volatility is expected to continue. The Fed has raised their rates, has continued to raise their rates. So that's affecting our short-term investments and our ability to earn a little higher there. This next slide shows our fixed income index returns. It's the history and the projection out. Our interest rates and strategies, our themes for Q1 2023 and beyond. Short-term agencies, both fixed and floating rate, look good, so we're keeping an eye on that. Floating rate instruments offer an appealing option to capture rising rates. We have high-quality municipal bonds and U.S. Treasuries, and our 1 to 3 fixed-year rate bonds are beginning to look a little better in comparison to short-term investments. We meet with our investment advisors monthly, and Mr. Nunez and Mrs. Hinton and myself, and also our assistant director, Luke Whitty, we take a look at our funds and our cash flow, our rate of return, what we have coming due. In November, we received a large tax deposit, which we'll get to in our portfolio slide. So if you see, in December, our concentration bank account had almost 156 million in it. That's because of the timing. We get the bulk of our tax collections at that time of the year, and then we continue to get a little bit more of our funding as we go through. The tight times of the year are July, August, September, October, starting around there, where we monitor our cash flow very, very closely. And if at that point we have a pool of very liquid investments that we're able to take out to cover our monthly transactions. Some districts have to take out something called a TAN, which is a tax anticipation note. Basically, you take out a loan and you are securing that loan with your tax receipts. Polk has been fortunate, and we have a good staff that's kept an eye on it, so we haven't had to do that. And hopefully things will remain steady so that we don't have to go into that. Rates are usually low. It's about $200,000 on a $20 million note. Our compliance summary, as you can see, all of our investments are in compliance. Second page of that. Our summary of accounts. Our sales tax is the skinny blue line. The larger is our main funds. We're required by statute to keep our sales tax, our impact fees, and our general investment pool separate. This slide is dedicated to Fifth Third Bank. It shows our performance index and difference, our earned income this quarter, managed portfolio diversification, maturity distribution, and our portfolio characteristics. This slide is a history of the performance. And then we have a listing of our transactions. This is specifically our sales tax. It's denoted by the ST. So Fifth Third for sales tax alone. The bulk is in municipal. We have a little bit in cash. Same metrics. Same performance history. Quarterly transactions, it shows the list of that. And then this is just a glossary of terms. I do want to share that we had a large amount of funding in a money market account with Fifth Third, which we were not earning very much on at all. So we did take that out and we reinvested it in Florida Fit. And that concludes our investment presentation. Other things that are going on, we are in the middle of budget season. It's February, so we're starting to develop our long-term budget. We're also within that focuses mainly on our general fund. We're in the last 2 years of our ESSER grant, which is the CARES Act. So we're focusing on ensuring all those dollars are being spent adequately and in accordance with our grant application. We've also started up a capital committee for our capital funds, our capital investments. As you know, the district is growing exponentially. We're looking at having to build some new schools. So we are organizing and reviewing our capital funding and have put key players together so that we can meet monthly. And then ultimately it'll be quarterly, but we're meeting monthly now until we have our process nailed down. And Align and his department are finishing up our ACFR, formerly known as the CAFR. And we will have that to bring to you once we have everything in place. We've had some timing struggles. They have a new GASB 87 for leases. It's a way that we record our leases. So that's provided a little bit of a challenge. We have to pull those from the whole district to make sure we've included everything. And also, we did lose our director of accounting and our senior manager of accounting at the same time. So we have a brand new team that has done a phenomenal job of getting up to speed. It just takes a little longer sometimes to familiarize yourself with the information, but they're doing a great job.
Excellent. Thank you, Ms. Jenkins, on that. Anybody have any questions? I have one. I noticed, and this is just a little nuance, I'm sure. You mentioned during the investment portion that we were doing, the district was doing commercial paper a lot more, and I saw that balance to be 0 currently.
In December? Let me check my report.
I could be wrong, but
Book value. It does say 0, Mr. Keys. I will have to check with our, I want to have them double check the report. And again, this could have been a timing issue. We are December 2022. Let me get a date for you because we have 1, 3, and I believe 6-month investments. And we had a lot of things come due in December. And right before we got our tax deposit, we were watching everything very closely and did have to utilize some of our Florida Fit investments for payroll during that time of year. So that may be the reason for that.
Yeah, and I know that those things, and with interest rates being crazy, moving all over the place, I figured it was a timing issue, but I just wanted to question.
Yes, sir. I'll confirm that for you. We're actually meeting this week again. I hate that this is a quarterly report. I like things more up to date. So when we talk about December, I'm like, man, we're already in February, but it is the accounting world.
That's right. Excellent. Thank you for that. Any other questions? Seeing none, we will move right along the agenda, the internal audit update. Carol, that's you and your team. Take it away.
Thank you. I'll share my screen. Everybody able to see that? Okay. So we'll start with the overtime pay analysis that we do annually. We review any additional or overtime. I specify the difference because we have some employees that don't work 40 hours a week. So anything above their normal hours would just be at straight time. And then anybody that works over the 40 hours would be considered overtime. But we review any additional and overtime pay for the entire year of 21-22 fiscal year. We paid out a total of $3 million, and that was paid to 2,532 employees. But the district received reimbursement of about 86% from ESSER funds and other funds related to the CARES Act, as Heather alluded to earlier. The breakdown of overtime was pretty much equal between school employees and department employees. We had two departments that earned the most. That was transportation and maintenance services. So we asked those departments to submit a written response justifying the need for the overtime and include that in our report to the superintendent and the board. District policy states that overtime should be used primarily to address circumstances of an emergency or temporary nature. So that is why we look at this each year and just, there's not a wrong or right number or answer, but we look at it for an analysis to see where we're at and, make sure that that is justified. I included a graph of the last 5 years. And as you can see, we had a lot more this past fiscal year. A lot of that is related to COVID. There's still a lot of cleaning for the custodians that they have to do. We also have our staff shortages that have to be covered by people like in the maintenance department, for example, that are trained in certain areas. Those people have to be the ones to do the call outs and so forth. So that is what we found when we analyzed overtime this year. For payroll training, the IT department shifted their platform to Schoology. So we worked with them to move our existing payroll course over to that platform. And then employees that are responsible for payroll accounting were notified of the annual requirement to take the payroll courses and pass the quiz. So we're maintaining that training module. And then I will let Davina talk to you about payroll audits that she worked on this past quarter.
Oh, good morning. Can everyone hear me?
Yes.
Okay, good. Well, this past quarter, we completed the following payroll audits for the 22-23 fiscal year. And those were Scott Lake Elementary, Karen Siegel Academy, Colwell Elementary, Haines City High School, and Haines City IB, which is International Bachelorette, and McLaughlin Middle School. Besides the common findings, including principals not approving all payroll exceptions and SAP, non-exempt employees working unapproved time over and under, posting errors and deficiencies with time records and leave forms. The following school had atypical findings. Scott Lake Elementary, 2 employees were not compensated for additional time work. Haines City and Haines City IB had unrecorded absences for an employee. Time records not approved by the principal. Lake Wells Elementary and McLaughlin Middle School had more than the typical average number and severity of findings.
I think you meant Caldwell Elementary, right? And McLaughlin?
Yeah, Caldwell Elementary and McLaughlin Middle School. They have more than the average number and severities and findings. So we recommended that the principal provided increased oversight to ensure that the payroll records were accurately accounted for.
If I could just stop you for 1 second.
Sure.
Like I said before, we're kind of given a report card, if you will, if a school has anything outside of the norm. So if they do a really good job, we let them know that. And if they need to pay extra attention because we found more than the typical number of findings, then we also let them know that. So that's the two here, Caldwell Elementary and McLaughlin Middle, that had above average number, or the type of finding was very outside of the norm. Go ahead, Davina. Thank you.
Okay. So Caldwell Elementary, they had posting errors that resulted in overpayment to an employee. Some non-exempt employees did not document time work, a requirement of federal wage and hour laws. Some employees failed to document their presence on certain days, and some time records were not approved by the principal. Leave forms were not completed for absences. And then for McLaughlin Middle, the principal did not approve 95% of the SAP posting. That was from 822 total entries through November 2022 for leaves and additional time work. Unrecorded absences were found for several employees in the sample. One employee was paid for hours not worked. Another was not paid for additional time work. And some posting to SAPs were not timely. Sometimes records were inaccurate, illegible, and did not include required information and were not approved by the principal. And I believe that's it. Any questions?
So I've got one real quick, going back up to the beginning and kind of the handout that we got or list there, and it states, in there that that overtime is to be kept at a minimum, and that any additional overtime should be documented and pre-approved on these call outs and things of the sort. What is the pre-approval process on that? I guess I would ask, because obviously if you have an emergency, there's little time for approval. And then, is there really, or I guess, what are the level of pre-approvals going on with overtime? Because, although we can wave the COVID flag, I'm not saying it's not relevant, but it went from, a number, and I don't have that slide in front of me, but up to $3 million in overtime. It was substantially more overtime. So how are we going about that pre-approval process, I guess, is what I'm asking.
Yes, we do look at that. We always ask, was there pre-approval? And then if there wasn't, what were the circumstances why it couldn't be obtained? And if it's a call out or an emergency nature, an employee doesn't show up, or, something like that, then obviously that's understandable. But we do try to make sure that they're following the proper protocol, which would be pre-approval when possible.
So Carol, this might be redundant, but my question was, you said, there is no right or wrong. It's just, you just analyze it. But so is this justified, I guess, is my question.
Right. And, basically what we can do is look at the numbers and then go to management and say why, and then they put in writing the justification for it. And then we send that report to the school board, the superintendent, and top management that's involved. And then really it's up to management to say whether they, agree with that or not. We include that chart so they can see how much it's increased. So it's really a tool for management. Obviously, if we saw something that just really jumped out, we would emphasize that. And this is just a process that we go through to look at the numbers and see how the trend is, and then put the onus on management to explain it. And I do have, like, for example, I have a couple of pages that our transportation department responded in very much detail of why their overtime was necessary. Obviously, I didn't include that in here, but that's how we approach that.
So once you've provided this information, your job is done then? I mean, as far as it's up to management at that point, and I guess our role in our oversight role, it's not up to us to see how
Well,
management takes care of it from there.
I mean, no, I wouldn't say that, but I think anytime you have an audit, that's what you do is you look at what has occurred and you report on it. And yes, you may have some recommendations. Our recommendation for this audit was basically, we pointed out the policy, which says that overtime is used primarily to address circumstances of an emergency or temporary nature. And then we just ask that management monitor that and make sure that it is necessary. It's a little bit hard from where we sit to make a judgment on that, whether it was necessary or not. So I feel like having the audit and reporting on it and it going to all the people that it goes to, the fact that they have to respond in writing, I feel like those are the steps that we can take, and then looking at it every year. Everybody knows that we're going to look at it and report on it every year. Heather has something to add.
I can unmute. If I may, from the management side, we have had a significant number of vacancies in both of these areas and district-wide. So what this has prompted us to do is look for a solution. We need to fill those positions. So we are looking for recruitment techniques, other avenues we can reach out to, our hiring process. A lot of this overtime is caused by the vacancies, which we'd really like to have full-time folks in here so that we don't have to do that, have to extend, but we are working on it. For example, I checked the other day, I believe we have 8 vacancies in the maintenance area in key trades areas. So we're meeting with our technical colleges and looking for areas where we can find some folks to come work for us.
And I'll kind of spring off that. We've noticed we've spoken of vacancies and transportation being one of those major ones as overtime. I'm just gonna try to draw a straight line here. I'm gonna assume that's bus drivers. And what do we know? Any kind of figures from an audit standpoint? What are the shortages there? We have 8, vacancies in the maintenance, but how many bus drivers are we short on still?
I don't know as of today. A couple of weeks ago, I believe it was in the 60s, but I can't say for certain. I would have to I'll have to pull a new vacancy report and see where we stand as of today.
Well, I mean, for me personally, I'm satisfied with that response, and this is why we do what we do. This is why there's oversight. This is why we audit things, and I wanted you guys to say it was because most of it is staffing, but yeah, it's a real problem, and it's not just with the district; it's everywhere. So that's understandable.
If I could jump in too, I'm sorry. I just want to mention it's important too to keep when you're looking at the data, keep in context too just the inflation that's been seen in wages as well with the change in the minimum wage, and just for next year when this report comes out, it's important to note the new minimum wage now that the district has moved to, which is going to move those numbers up regardless, just from that point.
Thank you.
From an excuse me, from an analytical point of view, kind of towards Travis's comment, it could be helpful for us to have a relational analysis of this overtime, given the significance of the increase from the prior year. If it is related to absenteeism, how many absences were related in that fiscal year versus the prior, as a context of the value of overtime incurred? Looking at it from a dollar perspective, you sometimes lose the relational value that you're truly comparing.
Thank you. I'll provide the management response. I think that will help also to kind of talk about what we've covered today, where they've put in writing more detail about their staff shortages and so forth. Heather, do you have anything else to add?
No, ma'am, that's all.
I didn't know if we could provide any data, like Mr. Reader was talking about, as far as being able to compare from year to year.
The challenge we have with our vacancy report is it's in real time, and I have copies of it, but I'm not sure if I have one from the same time period. When you run that report, it shows you real time. I think I mentioned a couple meetings ago that we're in the process of upgrading SAP. We have some reporting challenges. We have some challenges with our 20-year-old system. We do business a lot differently than we did 20 years ago. So we're biting off a chunk at a time and upgrading that. But I will most certainly look and see what I can put together in comparison to last year for you all.
Yeah, and with that system being so fluid and live, I think it would be helpful from historical analysis to take quarterly snapshots and somehow archive those to be able to compare them back to. We're not doing that. I mean, hopefully we see this trend go down, but as Aline was saying, if we're seeing wages rise too and still have the vacancies, that number is going to continue to get worse. So I think it would be helpful if there was some type of quarterly snapshot of vacancies, and we can go back and say, hey, where were we at? And it kind of fits as we meet quarterly to compare and contrast those. So
yes, it does auto run. Actually, it auto runs weekly, but we had a couple months where we had issues with the report. It's been corrected now.
Okay. Jennifer Christensen presented the results of the internal funds audit to you today, and she'll present to the school board at their next meeting, which is February the 14th. This audit is required by statute, and this is the 9th year that CRI has conducted this audit that includes 100% of the schools and departments. And as she mentioned, we work with them in gathering information, such as the annual financial reports from all of the outside organizations, answering questions and reviewing the draft reports for the 146 schools and departments. And then the district audit, as Heather mentioned, Clifton Larson Allen is performing this. Because internal audit is independent in our organizational structure and we possess the necessary educational qualifications, the external auditors are able to rely on our work, which is a savings to the district, a cost savings. And we provided CLA with the following audits that internal audit performed: payroll audits, purchasing card expenditure audits, travel audit, inventory analysis, and our district overtime pay analysis. That is all in the way of an internal audit update. Any questions?
all righty. Seeing none, we're going to open up now. Thank you, Carol, for that. We're going to open up for public comments. We'll wait a few seconds for that.
Carol.
Go ahead, Tom.
Can you hear me?
Yes.
In the minutes of our last meeting, there was mention of working with the union to this whole issue of the schools secretaries and their school responsibilities. And there was a mention of the fact that you're going to work with the union to differentiate between the secretaries for next year. It mentions a principal secretary, a registrar, and a financial secretary, 3 different positions. Is that at all schools, or is that just at some schools?
I will need to defer to Heather on that. She's heading that up.
It's at some schools, because our smaller elementaries,
Right.
We add in the finance and the registrar depending on numbers. So we're actually taking our staffing plan on February 14th to the workshop to share with the board. And we have the factors within that the formulas that calculate. This year, our larger middle schools will have both the the principal secretary plus the 2 new finance and registrar, as well as all the high schools. And then as we move forward, we'll expand that into the elementary as we see how things are working. That's going to enable us. We'll have one point of contact in the elementary, which will be the principal secretary that pretty much does everything. And then the larger middle schools, we need that finance secretary because they have a few more internal accounts and increased responsibility because of the number of kids. And then in high schools, of course, you have a greater volume of internal accounts and the registrar. So we're doing with our staffing, we're almost piloting our formulas. We're making the changes, and then we will reevaluate and see if we need to add those at additional schools next year.
And that's included in your budget for next year?
Yes.
Excellent question. Thank you, Tom. Anybody else? All right. I know you're all excited about
I'm
this.
sorry, I was a little slow coming off mute. This is
Sorry,
Teresa.
Teresa.
I noticed that we keep having the same issue with principals and payroll. My question is, I don't know the process, but my question is, when it's time for payroll, is there a program that pops up that says, okay, principal, here is your payroll, and they check off, sign off, or whatever? What is the process for that?
We send out a gross to net. It's called a gross to net report. It shows for each employee that reports to you their gross salary, plus their taxes and benefits, and what their anticipated pay is. So I've been working with our business analysts for SAP and also our payroll department to see if there's a better way, a better report, an online way for them to approve rather than just reviewing the gross to net report. I know myself, because of my position, I get 10 of them. So I see like all the substitutes, I see all my divisions, I see, everything. And just even me in my job, I can look at them and I have an idea, but I think it's difficult for a secretary, especially if you have a new employee. I know where to go. I know how to pull it up in SAP. I know how to look and see what that person makes, which the secretaries do as well. But I think we can make it better. I think the process is older, and I think we can do something to make it better for them to help them make sure that they accomplish it and get it completed every month.
Okay, so when you, I'm sorry.
No,
so when you look at that report, do you know Jane was off for 40 hours last week and we deducted that? I mean, maybe I just don't understand the process all the way.
No, you don't see that in the report. You see, I can't share it because it has employee information on it, but I can read you the columns. Pull up the one I had up earlier. So you see the employee number, you see the name, their location, their salary gross, Social Security, Medicare, deductions, any claims, what their net is, the pay date, and the position. So on the gross to net report, you don't see that information, but there's another screen, and we've trained our principals and principal secretaries on that, where you go into SAP and for your salary and your hourly employees, you have a leave request, and you review that request and then you approve the request. So we get paper leave slips, which I'm also working on. So what my process is I have a calendar that when I get my paper leave slip, I I record it on the calendar. I approve the leave. My secretary files the leave for me. Whenever the gross to net and in our payroll approval window comes up, which payroll does send out an email, then I take my calendar, I take my stack of leave slips, I go in, I compare. If I have a discrepancy, then I talk to my secretary or contact the employee. In different divisions, different people enter the time. And then once that's resolved, I approve it. So then when the gross to net report comes out, I know essentially what everyone should be making for that pay period. So I review the amount and that's make sure it's close. But if you have an instance where you have an hourly employee and their paycheck would be maybe $61 off or something like that, it's difficult to see that at a glance or to know what that is. So that's what we're working. We've hired a new HR business analyst for our SAP team. We have a team that works with our departments. So that person's up and being trained, and we have one for payroll. So once our new person gets completely, or not completely, but more intimate with our HR practices, this is on our list to develop a new process, and also with our SAP consultants, because a lot of it is related to our systems. I would like to automate it, not necessarily automate it, but have it access in the computer system so we don't have so much paper. And so it's a more streamlined process. Does that help?
Thank you so much. Yes, it does. Thank you so much. I appreciate it.
I would like to add too that when you see those, when we report on those, like 95% was not approved by the principal. Well, like Heather said, they get an email and it says, okay, you need to go. I don't know what it says exactly, but basically that's the time to go in and approve your payroll. So if they're going in on a regular basis, you're not going to see 95% it's not approved. You may see 60, 50, and we give them some grace. So we wouldn't make it a finding unless it's over, what is it, Davina? If it's less than 80%?
Correct, 80%.
Yeah. So if they approve 80% of their entries, then, you know, we figure that's a pretty good job. And what that is any exceptions. So payroll gets paid, and you don't put anything in the system. The secretary wouldn't put anything in the system unless there was an exception, like leave or additional time worked, for example. So that's what the principal is charged with approving. And so theoretically, they should have the paper leave forms like Heather referenced and say, yes, this person was off this day. And they click approval, you know, each approval. If they don't do that, well, then payroll the system just automatically approves so that the paychecks can be distributed. That's old terminology. It's direct deposit, but you know what I mean? So that's what we're trying to get them to do, is them to go in, because the system doesn't know if the secretary was out, but the principal should. So it's an important internal control for them to approve their own payroll. Thank you for asking.
Excellent. Good questions. Good questions. Anybody else before we begin to wrap up here? Wait. All right. Seeing none, hearing none, we'll move on to that final item, setting the next meeting date. We have on there Tuesday, May 2nd. Is everybody in agreement on that? Is there anybody that says that doesn't work for them? Nobody's saying anything. That means everybody's excited about it. Everybody's good. So with that being said, we'll adjourn our meeting today. Again, appreciate every one of you and your time. Thank you so much. You guys are awesome, and we'll see each other next quarter, May 2nd.
Thank you all.